Hey everyone, welcome to another episode of Blogcast with your hosts Will and Simon. How's it going, Simon?
Will, I'm doing really well, thanks, mate. So today's topic is handle finance. And so this is a very, very small cap project. So we are definitely looking at something that's definitely very early on, so a very risky project. But what it's trying to do is basically be a stablecoin exchange. So multiple stablecoins. And I think this is a really good thing from moving away from necessarily people just wanting to be using US dollar stablecoins. It's got the euro dollar, British pound, Australian dollar, Singapore dollar, the Chinese yuan, the Japanese yen, a whole bunch of different stablecoins. And I think it's definitely going to be potential for a base layer Lego block of DeFi.
And so you said it's an exchange, but I think it's also a little bit more than that, isn't it? So it's not just about exchanging stable coins, but I believe that it actually creates the stables as well, right?
It's like a MakerDAO, crypto collateralized stable coins that are created. So you can go and mint your own FXUSD, FXAUD, and etc. for all the other stable coins. So you can go and borrow against your crypto and create these stable coins.
So I want to say it's about time that we had other stables besides the USD, but then what is the advantage? Why did they decide to do this? I mean, we already have MakerDAO, which has DAI, which is parity with the dollar. So, why do we need other stables?
Well, I think it comes to preferences of individuals of what they actually want to hold. Not everyone wants to be holding US dollar stable coins. And I think, again, when I go back to the concept of this being a base level of DeFi, is that this could be interconnected with the Lego blocks of DeFi. We talk about how all the different DeFi protocols tend to connect together. People could be trading in their preferred currency using this protocol and not really know it, because in the back end of things, it's actually doing these trades and swaps on handle finance. So you can be trading your Australian dollars for Ethereum, for Bitcoin, but not actually knowing that it's routing through something like handle finance to get those Australian dollar stable coins, converting to US stable coins, converting to Bitcoin. It can all happen in the background for you.
And I think it's about time as well, because I mean, the dollar is great, but there's times when you don't really want to hold a dollar. Maybe you want to hedge with a different currency. Maybe you want to hold your own currency. I think it's actually pretty strange that it's taken this long since DAI came out for other stables to come out, right?
Absolutely. And like handle finance is not the only one doing this. I know there's another one called Angle Protocol, but they're just focused on the European dollar. What I like about handle finance is they very much so are trying to be a kind of like a Forex exchange. And I guess this is where it starts to get into another level of what handle finance is actually doing. That's allowing leverage trading between crypto stablecoins. So you can be leverage trading just like any normal Forex exchange would, except crypto backed, which is very interesting. But obviously, it's going big headwind there, because obviously traditional finance has plenty of ways to trade and leverage stablecoins. Well, they're not called stablecoins when the Forex exchanges are doing it. But allowing it to be in the crypto sphere, backed by crypto, I think there's a real interest in wanting to have that ability to trade between currencies as well.
It's definitely about time. So when you say leverage, what multiples are we talking about? Is it 5x, 10x?
Yeah, this is where I guess it gets into the craziness. I think they actually have like some 100x options on there, which is getting pretty crazy. And that's kind of where the big exchanges ended up backing away from. So I don't know whether that's a good thing, having that much ability to leverage. But when you're talking about, leveraging, against just stable coins, the risk is, somewhat less, because currencies don't tend to have as much volatility. But like any leverage, it's up to the trader to take on their own elements of risk. And so the inexperienced person using 100x is probably going to get burned badly.
Yeah, and I feel like leveraging is also really useful because it gives market makers more tools to use in order to make profit. And as they make profit, they're also making sure that spreads are lower. I've tried a bit of trading myself, and when you're trying to market make, I mean, the profits that you get are minute, in orders of, let's say, less than pennies. So if you're able to do it with leverage, I think it makes it more interesting for market makers to do that.
Look, people like to gamble, people like to lean onto their experiences, and I guess that's what leverage in trading is all about. I guess the other thing that makes this an interesting protocol is that not only does it allow leverage trading, but similar to GMX, the huge derivatives trading platform on Arbitrum, and this is built on Arbitrum as well, mind you. They allow people to participate in providing liquidity, because this is centralized exchange, decentralized leverage trading. They need liquidity from somewhere. So again, it does something very similar to GMX in that you can go and deposit a bunch of different collaterals, wrap Bitcoin goes into effectively an index fund where it gets split between all the different currencies within Handle Finance, and that liquidity is then used in the decentralized leverage platform, and you earn fees because of that. So that is just one of the ways in which Handle Finance is allowing people to earn fees. It's providing liquidity to allow the decentralized exchange to actually work, which is really cool.
And so who is behind this project? How long has it been up?
Yeah, great questions. I guess this is like a lot of crypto projects, is that it's an anonymous team, which is never great, and is usually a bit of a red flag to make sure you tread very lightly with these kind of things. I haven't figured out or found out. They're not deliberately trying to be anonymous per se, but they're not advertising who the team is. So it's always, caution in a very small market cap like this. You've always got to be cautious anyway. So we don't know who the team is. How's it been going? I think it's been around for about 6-7 months now. So the protocol itself has been running in crypto terms. That's quite a long time. And the total value locked at the moment is still very low. It's about $1.7 million total value locked. So there's people using it, obviously nowhere near the network effects that you want to see to actually make this a really long-term project and to really earn fees by providing liquidity and things like that. So it's very early stages, but we're looking at a cool idea rather than a successful project, but it's definitely a working project, which is great.
I think it's really interesting, especially in terms of the token, because so the Forex token is a governance token, if I'm not mistaken, right?
It is predominantly a governance token, yes, but it can earn fees as well.
And so I think what's interesting about it is that assuming the project grows and there's more trading going on, and I think it would be really interesting to hold this token, because if I owned a DAO and I had my own token, I would want my DAO tokens to be part of the collateral, right? Because that makes it super interesting for my project, because that means that people who hold my token do not necessarily have to sell it if they wanted to acquire the dollar. One of the things they could do would just be to deposit out there and get either the dollar or the yen or any other token, and that would reduce the selling pressure for my DAO token. And I just think that if this project becomes big, if HandleFi becomes huge, let's say to the order of how DAI is, I think a lot of projects would definitely want to hold that token so that they can essentially pass proposals to get their tokens passed through as collateral.
Yeah, for sure. And this is coming to, I guess, the second way you can actually earn through HandleFi. And this is a unique take on, I guess, a DAO in general, is that just holding the Forex token doesn't allow you to vote. So you actually have to stake it, and that's not uncommon either. And it's very common, I guess, for delegated proof of stake kind of concepts for DAOs. But this one actually requires you to stake it at an 80-20 percentage ratio, of 80% of it being their Forex token and 20% being their FX USD, so their created stablecoin. And so it makes you put skin in the game of both Forex token, and you've got to go and have minted, and creates demand to a degree for their US dollar stablecoin. So very interesting concept. So you're not only putting your Forex at stake, you're putting some US dollars at stake in order to get voting rights for the DAO. But once you are staked, you're then also earning protocol fees. So that's the key to earning the protocol fees, is that you have to get some USD as well and stake it. And this is the part that I don't like, though. It also requires a lockup. So there is a lockup period for staking like this. So that's often a risk in crypto. It's a risk in general, but they're very much so putting that incentivizing state out there. So if you want to hold the token and not have that risk of locking up, that's great. You then don't get to earn protocol fees. You also don't get to vote. Most people don't care about voting, though. But if you want to earn those protocol fees, you've got to participate by creating some of their US dollar coin at an 80-20 ratio, stake it, and then earn some fees. Be prepared for a lockup period.
Oh my goodness. So, okay, so if you want to vote, you need to lock it up. But then what if I want to just create yen? Is there a lockup period? Or if I create yen or the dollar or some other currency and I wanted to withdraw it, say, today or tomorrow, am I able to do that? Or is there a lockup period for that as well?
There's no lockup periods for that. So when you are minting the stable coins, regardless of currency, you are putting ETH up as collateral and you are minting your FX yen, I think is what that token is. It's instant, on the blockchain there. So there's no lockup periods. And if you want to convert it back, it's instant. So no, there's no lockups in using the protocol for stablecoin swaps, for stablecoin and liquidity providing. It's only a lockable period if you want to stake your Forex token and earn the fees from the protocol.
I think that's really amazing. I think it's great that we're getting all of these different currencies out there, but in blockchain form. That means that come the bear market, when it's time to, I guess, rebalance and hold less crypto, hold other tokens. I mean, this is amazing. I'm wondering if there's an opportunity for it to extend beyond just currencies to other commodities, let's say gold, silver. I think it would be pretty interesting to see that, right?
Yeah, and there's definitely grounds for that, but that's one of those things where we are bridging crypto assets to real world assets and how well that comes. I mean, you can still do what Handle Finance has done where they're bridging to a degree to a real world asset, but they're using Chainlink as the oracle to say this is the price of a US dollar, this is the price of the Japanese yen. And that's how they maintain it, using the Chainlink Oracle. So you could use a Chainlink Oracle for commodities and things like that as well. There's no reason you couldn't do that.
I think that'll be really exciting. But then now, the question comes, we all know how what happened to Luna a couple of months ago, almost a year ago, where it completely pegged from the dollar. So I guess my question is, how secure do you think this project is? How tightly pegged is the yen and how tightly pegged is the dollar to the actual dollar? How confident are we that we can rely on this protocol?
Yeah, great question. So the protocol is 100% backed by crypto. So it's crypto-backed collateral, same as MakerDAO. So they require Chainlink Oracle to compare the Japanese yen price versus Ethereum, if that's the collateral that's being put up. So, Chainlink is obviously the leader as far as Oracle pricing is concerned. So from that perspective, the feed that it gets from Chainlink is pretty secure. So it's just like any other borrowing capacity on using crypto, is obviously see your position get liquidated. And so again, that comes, I guess, to another way with which you can earn yield using the HandleFi protocol, is that you can put money into the system that will buy out the liquidity when somebody is in a position to get liquidated. So when the Oracle feed says that this person's position is getting to the liquidation point, they use people's who have provided the funds to buy their crypto at a sale price to make sure that the protocol doesn't go into negative rates. That's a hard, confusing one.
And that sounds a little bit more secure than the DAI, because I don't think the DAI has a sort of a guaranteed buyer. I believe it has Maker as the buyers of the last resort, but it's probably not as, I think, secure, at least in terms of the setup.
Yeah, well, maybe I can give it a better way of explaining that, because it's very confusing. But yeah, you're right that Maker is the buyer of last resort and that thing. But if you compare it to like an Aave, when someone's position is close to getting liquidated, I'm pretty sure that they actually sell it on chain on Uniswap. And so plenty of liquidity, and that's why they only choose high liquidity tokens as collateral, because they would need to be able to sell it on the market quickly, and they use Uniswap for that. Again, that's the Lego blocks of DeFi connecting together here. So HandleFi probably would have that option for some elements of it, but they decided to put another element of people earning money by allowing you to be the first point to make that trade. And so when you do liquidations, if someone gets liquidated, there's a fee involved. and that fee is a clipping. So that goes to typically the protocol. I think Aave takes the money when they have to liquidate someone. And in this case, the fee for liquidating someone goes to the people who provided the capital to buy out that liquidity. And so it's a very interesting thing, rather than just going straight to one of the big dexes and making that trade. And maybe it's not really, because I guess you might need that on Arbitrum, I guess, because the dexes aren't as liquid, but Arbitrum being the DeFi layer 2, it's probably not the case, especially not for handle finance with how small they currently are. But yeah, it's just another unique way that they've gone, okay, rather than us just taking the fees, or the treasury taking the fees for someone getting liquidated, we're giving that back to users as well.
Mm-hmm. And I believe it creates really good competition for the DAI. So if I have a bunch of Ethereum and I want to convert it to the dollar, which really what I'm doing is, I guess I'm borrowing and getting DAI, or rather I'm putting collateral and I'm getting DAI. Well, now I have a bunch of options. I could either put it on Maker, get DAI at a certain rate, or I could go to HandleFi and, maybe potentially get a better rate, maybe get a currency that I'd rather hold,
Yeah,
and so that's, yeah. Mm-hmm.
It takes network effects, though, because obviously the FX USD, which is probably still their biggest stablecoin created at the moment, the liquidity is very low. So moving that to other things to earn a better yield, or even just trading it for Ethereum, if that's what your idea is, you want to use your Ethereum to borrow stablecoins at a cheap rates, like 0.4% interest at the moment. I think that changes obviously as the dynamics of the market changes and more people borrow and less liquidity there to borrow from. But then you can go and buy more Ethereum with your FX USD. And just like any other stablecoin like DAI, it needs to get network effects, it needs to get adoption, and then other DeFi protocols start utilizing that one as well. So FX USD, as far as I'm aware, is only pretty much being used on like a balancer liquidity pool. I think there's a curve liquidity pool, but not built into other DeFi elements yet. And then you can imagine, that's why I talk about the Lego DeFi blocks. People don't just want to use USD. So if people want to use the Singaporean dollar, then Handle Finance can be the base layer of that. And then other protocols can start using a Singapore-based dollar as well and building that to the system. It's giving people the choice of stablecoin they want to use.
100%. And it seems to be just a matter of time, because when DAI came out, I don't think it was as trusted as it is now. It's been through a whole bunch of bear markets. And, when it started out, it was completely decentralized, but now you can get it on Binance, you can get it everywhere. So I imagine that as long as this product keeps performing well, give it time through a couple of bear and bull markets, I imagine it'll continue to grow. And I believe that TVL has grown over time, right? There was a point in time when it was only 200,000 locked up, and now, like you said, it's I think a little bit above $1 million. So, hopefully as we hit the bull market, they might have additional incentives to get people to create more yen and so on and so forth. And hopefully we'll see some growth come out of it and more trust.
Yeah, exactly. And these things take time, and it takes the people wanting to start to use the program, the project. And what I like about it, as I said, is there's so many different ways to earn. You can, be a liquidity provider, similar to GMX. You can earn buy Forex, stake it, and earn protocol fees. You can participate in the liquidation process. I think they call that FX Keeper, and earn fees from that. And then there's the normal ones where you can actually go into liquidity pools as well. So you can be a ETH versus FX USD liquidity provider, earning fees from that. And so that kind of interest in stable coins and earning fees and multiple ways of doing it, I think there's a lot of value in people seeing that.
And what do you think the investment opportunity is in Forex token?
Super risky is the basic thing. I mean, what's the market cap of it? It is really tiny. It is a $8.5 million market cap token. So this is like super, super risky right now. And what you're gambling on is that, do other people think this project is as exciting as I do? Maybe they don't. Maybe they don't. Maybe other people don't want to use stablecoins as much. So I think this is a high risk play, but obviously you can own the Forex token. You can own the Forex token and stake it and earn fees from it. You can just provide liquidity for the leverage trading platform, just like GMX. So you don't even have to take the risk on owning the Forex token. You can just participate in the liquidity providing. And I mean, that's a risk in itself. If the project completely fails, then their stablecoins in some way, shape or form would, well, they shouldn't devalue because it's all crypto backed. So providing liquidity in that way is pretty safe. So there's multiple ways to earn. Obviously, the big longer term investment is in the Forex token. And that's whether or not you think that stablecoins being multiple different currencies has a future.
I'm a big fan of stablecoins, and especially collateral-backed stablecoins. So I'm really glad that DAI came out there and did what it's done already. I'm really surprised that DAI hasn't expanded into other currencies. And so it's great to see HandleFi come out and at least challenge DAI and Maker and get them to see that, you know, there's a market for these other currencies. And, you know, and I think, and to agree with you, I think it's probably a risky project, low market cap, potentially decent returns depending on how the market adopts it. So definitely something really interesting to keep a lookout for.
Yes, definitely. And it's not like this is the only stablecoin idea out there, but there's just more, you know, like Aave is coming out with its stablecoin, but it's another crypto collateral US dollar stablecoin. So the market is keen for it. I mean, the 2021 bull market in 2020, we saw stablecoins shoot up the market cap. So there's a huge amount of stablecoins, predominantly obviously just USDT and USDC, and DAI was up there, and we had Binance USD. So huge billions and billions of dollars of stablecoins coming to the market. I see a future where people don't want to just use US dollars though. So it's very interesting. I think so many other projects could want to connect into this, as we've seen DAI is the best example. DAI is on Aave, DAI is on all their lending and borrowing platforms, and it's intertwined in so many. So I don't see why other projects won't want to say, well, hang on, let's get the euro dollar into our project as well, so we can get the Europeans. Let's get the Chinese people interested because they can use the Chinese stable coin. And I think that's really interesting to people.
And I guess that covers it for this show. Until next time, Simon.
Thanks, Will.